All right, good evening everyone, and thank you for coming again to another Stocks and Sips event. We've got an exciting company here, Xenitra, and I'm joined here by Dr. Anthony Noble to explain the company and to answer any questions you've got. So maybe Anthony, you can tell us a bit about the company, introduce it for the people that don't know the business, and then we can go through a bit of our Q&A.
Yeah, thanks very much for having us here tonight. So Xenitra is a company used to be called AU Make Limited. We rebranded recently. We're a business that primarily operates as a sales and marketing company in the Chinese market through cross-border e-commerce. Historically, the company was very engaged in the tourism industry up until COVID, but has evolved what it's been doing to be much more focused on cross-border e-commerce into the Chinese market. So a lot of you might know about the Daigao industry of products from Australia going into China and how big that was in the past. That's an industry that's evolved into a more sophisticated cross-border e-commerce framework, and that's opening up to more products than just the typical ones that you'd expect to see in that channel, which in the past have been things like infant formula and highly known branded vitamins. It's a more diverse channel than that now. And over the past 12 months with the company, we've been evolving our strategy, rebranding the company and becoming a lot leaner. And we're making some good progress, and we think we've got a really exciting year coming ahead of us.
Excellent. Now, reflecting as your time as chairman, how would you describe the journey so far since March 2025? And what do you think the market might be underappreciating at the moment?
Yeah, I think obviously when a company goes from one position to another, and COVID was a big part of that for AU Make, we need to articulate our strategy a bit more clearly. And so we've definitely tried many different things over the past couple of years, but I think probably what the market should appreciate now is that we've leaned up the company really significantly. We've cut a lot of cost out of the company, simplified the business model. We've got a lot more focus on the type of products that we want to sell in the FMCG goods market. We did try some other more wholesale things in the past that were a little bit more volume based, but the company's now really focused on brands, focused on FMCG, and focused on products that have high velocity of sales to the Chinese consumer. And I think it's very important to understand that we are dealing with China as what is now the largest consumer market in the world. So the amount of demand for products and the velocity that we can achieve with those products is very high. So there's a huge amount of upside for getting this business right.
Now, we had a chat in there. You're building an integrated digital e-commerce platform. I think you talked about a bit of tokenisation. What's the differentiating factor with you guys to the Chinese consumer, do you think?
Yes, I think broadly we've got three groups of products. We've got products which we call nutritional products, and those are the kind of traditional Daigao products that you'd imagine. The volumes of those products is quite high. The sales velocity and the working capital turnover time on those is quite fast. But the margins on those are quite low. Those are commoditized markets where the brands are in the market and prices are reasonably well controlled. We've got two new buckets that are coming online for the company. One is OTC medicines. Those are sold through the same cross-border e-commerce platforms, the major platforms in China. Same logistical framework. So products are in free trade zone warehouses. They cross the border at the point of the customer having made the product, making an order, and it ships across the border. And the demand is generated through digital platforms, and there's 3 or 4 big digital platforms in China. And they for Australian people, you'd expect them they operate very much like an Amazon or an e-commerce based platform that you'd see here in Australia. So demand is there for the brands. The trading is across the border, and there are regulatory frameworks that allow us to do that, particularly if OTC medicines is something that's becoming a lot bigger. And the margins on those products are now more like what the margins of the Daigao products were. So higher margin, demand is there based on brands. And then I think the third part, which is what we're doing with the digital tokenisation, is really about products that we have exclusive rights for. So within OTC medicine, we can produce our own brand. Once we have velocity with branded products, I'm talking here for things like Strepsils, Panadol, cough and cold, everything you'd find in a chemist that you don't need a prescription for. Just like Woolworths has a generic version of Panadol, which they sell once they establish their ownership of the customer relationship, we can do the same thing with OTC medicines, and that yields us much higher margins through that channel. The tokenization is something quite new. It's actually not that new for people in Asia and in China. Big brands do this, brands like Louis Vuitton and Sheraton Hotels and many big brands do this in Asia. It's not something we see a lot in Australia. It uses the blockchain to associate a token with a physical product. So we call it real world asset tokenization, or RWA tokenization. And the technology is very interesting because it allows us to do a number of things. You can use the token to authenticate a product. So am I getting a real packet of Viagra, or am I getting a real Penfolds bottle of wine? You want to make sure with some of those things you're paying for, whether it's a medical benefit or a brand benefit, that you're actually getting the real thing. And counterfeiting is a big issue in Asia. So there's an authentication element to that. What we've built with our first token, which is called Opal token, is a second layer, which is around membership and rewards. So think of frequent flyers or your Flybuys points. So you mint the token to authenticate the product. You get some points. You go to a shop and you use those points to get rewards, and people will build them up over time. So there's more that can be done with the tokens than that. They've got, you can write whatever smart contract you want, really, on the blockchain. But in the first instance, we're keeping things utility-based for authentication and rewards. But it's really exciting. We've launched our first set of products with the tokenization, RWA tokenization, just 3 weeks ago. Sold about $350,000 in 3 weeks. So the sales velocity is really high. And the margins on those products are outstanding because they're exclusive to us. So they're very, very high margin sales because there's a willingness to pay that's created by the sexiness, if you will, of the token. So yeah, three major ways to sell. Commodity channel, which is a cement block of good, solid revenue for us. Have a $30 million contract we just signed that underpins that. And then we have our OTC medicine piece, much higher margin products, much newer, still a dynamic way to sell into the Chinese market for foreign companies. And then the tokenized selling, and that's really about bringing brands exclusively into our network. And as we build our network of distributors and customers in the ecosystem, that's something that will feed upon itself.
And I guess that's what's delivered the strong revenue growth and offtake agreements. They're the key drivers behind that.
Yeah, so the revenue growth has been entirely in the Nutritionals business that was recently reported. So we've only commenced the OTC business and the tokenized business in the current quarter. So the historical sales that we see are entirely in our nutritional side of the business. But yes, underpinned by that relationship with Rockcheck Group, which is a very big business partner for us. They're actually a trillion yuan turnover company, so multi-$100 billion conglomerate company, diversifying from minerals and steel manufacturing into healthcare and online pharmacy. It's part of their corporate strategy, so we fit into that as a supplier. And we've removed a lot of the complexity from that nutritional business. So we've taken a lot of our B2C elements out, focusing on big B2B contracts like this, focusing on things where we don't need a lot of staff members or sales and marketing expenditure from us to service those contracts, which is appropriate for commoditized products that have those single-digit margins.
Now, Xenitra is one of the very few ASX listed vehicles to offer direct exposure to the Chinese market. Now, some Australian investors remain cautious on how China, names more broadly. Now, how do you go about closing the gap between what you're delivering and how the market's recognising it?
Yeah, look, any international, my career's been in building international businesses, and there's always sovereign risk in those relationships, and it's up to the company to manage that. You manage that by being very tight with the way that you manage your working capital and your inventory holding position. But I don't think that there is an overall risk that the Chinese FMCG consumer market is going to be hit by complete shutdown. I think a lot of us would believe that the future of Australia has to face towards Asia. So I think yes, there is risk, but not risk that would be part of a macro downturn. I mean, the good thing about FMCG products and healthcare products in particular is that they're very counter-cyclical. They're recession-proof. There is no change in the number of people that are going to get a cough or a cold every month. The babies still need to be fed their infant formula. And people still need medications. So I think the nature of the products that we sell, being health products, are reasonably robust to those kind of sovereign risk issues.
Perfect. Now, looking ahead, where do you see the most opportunities for Xenitras to build long-term growth?
Yeah, so we're looking for modest growth in our nutritionals business, which is the commodity part of the business. We think we can probably achieve small double-digit growth, and that's appropriate. We're really looking to grow this new OTC medicines piece aggressively. Turning that business into a partnership business with some brands, even with some generics manufacturers, will allow us to grow that faster. But we would be expecting a lot of the growth to come from the tokenization part of the business, building exclusive relationships with brands. In the end, and I've taken brands to China for other companies in the past, there is a lot of apprehension. I'm going into this market that I don't understand the consumers. There are these risks around how will my product be acceptable, and I have these high fixed costs into marketing that I particularly may not understand how that marketing works. I know what works for my consumer in Europe or America and what resonates with them, but what resonates with the Chinese consumer is not something a Western brand necessarily has organizational capability to understand. So we see ourselves as being able to solve some of those problems for the international brands, particularly the authentication, but also that loyalty. So we think that with tokenization, we can offer a solution to a lot of the problems that international brands face when they go to China. And then as an exclusive partner, we're going to have a very much higher margin and much more control and much more, and there's an intellectual property piece to this as well. So we've actually got some intellectual property around the way we're building the tokens. So this is the thing we really want to focus on, is the OTC medicine growth as well as the tokenization growth. It's too early to say in the first month of both of those which one will be the bigger opportunity, but I would see the majority of the growth coming out of those two, with stable, profitable growth in our nutritionals business underpinning that.
What are you prioritising in the type of partners that you're bringing on, and how does this underpin your growth moving forward?
Yeah, so we've decided to be more focused in what we want to do, and the focus that we've said is FMCG, so fast-moving consumer goods, and durable goods as well. I think that's quite important. We probably want to be having things which have the ability to stay in a warehouse for a period of time and remain stable at ambient temperatures. That sounds like a small thing, but if you ever have a container full of lobsters or beef spoil, you'll probably be making an insurance claim and you won't get insured again. So durable goods, fast-moving consumer goods, and goods that families would use. So we have a huge customer database of people that have bought infant formula and nutritional products. Those are mums. The business has been doing that for almost a decade. So those mums now have kids that are going through life stages. Families have very predictable health stages that they go through. And the aging population in China is going to have a significantly increased demand for self-medication as we go forward. So we're focused on FMCG, health and family-led products that solve problems for people in their everyday life.
Now, this Opal token that you guys have developed that we discussed in there, can you just describe that a little bit more? Real asset tokenization, how does that help the consumer for those who are unfamiliar with this whole thing?
Yeah, so it's a blockchain asset, so you mint the token. That I've just learned, not mine, you mine the coins, you mint the token. So you mint these tokens, it's a finite number of tokens that are minted, and the way that the token operates is built into its architecture when it's built. So we've built a token that has that rewards system architecture. As we sell products to our wholesalers, a certain number of tokens are associated with a certain number of fixed products. At the point where a consumer purchases the product, they receive the token and they receive that into a wallet in the same way that you would a crypto asset into your crypto wallet. They can then go onto our closed rewards ecosystem, same way you'd go onto your Qantas frequent flyer, and instead of spending points, you spend tokens and you receive rewards. Those rewards are going to be things like all the things you'd expect. So products that we sell, and over time, as we build up the ecosystem, we can have rewards that look more like what you'd see with hotel nights, flights, things like that. The way this works for us as we go forward with it is we make a margin on a sale. There's obviously a cost of goods and a cost of sales associated with that. There's an additional cost here, which we call a token reserve. So a certain amount of cash is set aside from each of the sales, and that goes into a reserve, and that reserve funds the rewards scheme basically over time. What's different from a token to a point is that with points, they can mint as many, Qantas just makes up a point when you book a flight and they just give you a point and there's more points. So it's inherently deflate the value of the points, devaluing points. The tokens are finite. So the Opal token that we minted 1 billion of those tokens. That will represent approximately $20 million in sales that the company makes, and then we'll have to mint another token. As the tokens get used in the reward system, they get burned. But the value of that token reserve, we think, will not go down quite as much. So it's a different way of doing rewards where the token has a time value and will appreciate, And over time, as you use them, you'll potentially need to use less tokens to get a reward of certain monetary value. So it's a little bit more exciting for the consumer. There's a little bit more incentive to hold and not spend the tokens over time. And eventually there are other things we can do with the tokens, not the first one that we've minted, but future tokens could have other things like exchangeability, the ability to move those into other blockchain assets, or even to have those potentially securitized. That's not what we're doing with the current token, but there's a lot of exciting things you can do with them that you can't do with a reward point. So it's quite a cool thing to do, and consumers really like it.
Yeah, great. Given China's evolving stance on digital assets and cross-border e-commerce, how does Xenitra's approach regulatory risk, and what flexibility is built into that operating environment?
Yeah, so obviously regulatory around this has been something the company's given significant time and thought to. We've built our tokens on the BNB blockchain, which is the blockchain that underpins a lot of the crypto assets in China. And we've built the tokens under the framework for tokenization in the Hong Kong legislation. So these are a Hong Kong-based token. We're a Hong Kong-based cross-border e-commerce company, so it's appropriate that we do that. When it comes to dealing with Australia, you won't be surprised to know we're a little bit behind the rest of the world in terms of regulating these things. So we know that ASIC is going to give some guidance to the market sometime in November this year is when they expect. They're currently consulting. We've taken steps to ensure that we're fully compliant with what ASIC might require of us as a listed company in Australia, and that goes down to potentially holding an AFSL license if we needed to. We don't think under the current guidance, the rewards and utility tokens we have need that. If we want to do some of this more exciting stuff around trading and securitization of the tokens, we're preparing the company to be able to do that. So there's we're 100% regulatory compliant, and we're under a very well understood scheme in Hong Kong for where we're doing this now.
Excellent. Now, we've spoken about in there how you've streamlined the Nutritionals business, and you've cut quite a bit of the fat there. How is this going to be contributing to the overall performance of the group?
Yeah, so there's been a lot of cost cuttings being done in the group. We'll complete our restructuring of the company in the next 1 or 2 months. At the end of that restructuring, the company will have 1 Australian-based employee, which is our financial controller. So the entire business that operates in China is going to be in China. We've got 22 employees in China. Our business leader in China, Tracy Zhang, leads that business, and there's 3 leaders for each of the divisions of the company. So we've reduced our overheads in the company by more than $1 million in the past 12 months, which is a significant leaning up. That's about 40% reduction in the fixed cost base of the business. And I mean, I don't have to tell people, sophisticated audience, that means we break even and become profitable much, much earlier.
Excellent. Now, last question from me. What gives you the most confidence in Xenitra's success, and what are the key factors that are going to be achieving this year?
Yeah, 100% that's our team in China. I've spent a couple of weeks over there, and our leader in China, Tracy, is incredibly dynamic. I was there for the launch of our Opal tokens. It's a selling organization. It's a lean, sales-based organization. The way that people are remunerated is very much based upon sales. They are a sales machine. 3 weeks in the market, $350,000 worth of tokens, about 50 distributors signed up. It's 9 to 9, 7 days a week. It's an absolute selling machine, and we've got a really, really good team. And when you go through a really big restructure, sometimes some rats leave the ship, but sometimes you end up with a little bit of gold at the bottom of the pan. And so I think we've got a really excellent team. Our COO and our 3 divisional heads are really, really strong, and everyone in the business is focused on selling. And I've seen just how dynamic they are. I think that's our biggest strength. Some of the relationships that we have at the higher B2B level are an advantage for us, like our RockCheck relationship, for example, where we have guaranteed offtake for some of the major brands. And we're bringing brands from Europe, actually, primarily in the infant formula space, so Danone, Cabrita, brands like that. So we're not as much exposed to the Australian price fluctuations and brand things. But I think our biggest competitive advantage is really this diversification that we're now achieving into the OTC medicine. Some of those brands are also GlaxoSmithKline and Pfizer and multinationals. We've got some other really strong relationships which are not publicly announced yet in the generic side that could be quite interesting for us. But yeah, the ability to manage relationships and do these deals is really important, and our ability to work in the platforms in China. So we've got people in our team that have been inside JD.com or inside Alibaba's Tmall and have come to us very experienced in the way these platforms work. And just like any other e-commerce business, being able to drive your meta results or work the Amazon engine is actually a very, very specialist skill. And we've got a team that has really, really deep skills in the Chinese platforms and how they work. And that's quite hard to replicate for other Australian companies. The capital raise that we just completed today is primarily for the 2 new business units. The tokenisation business unit is a very high margin business unit. It's almost self-funding within it, so it's really a business that just needs inventory to keep moving, and it's very fast. So a small amount of the money that we've raised will be for capitalising the tokenised sales, and that's really just about adding new brands and having the ability to buy the inventory to put those brands into that system. The majority of the money we've raised is going to be about bringing online at scale the OTC medicines business, which does require more working capital. Again, buying inventory, making that inventory available and bringing that on. So this capital raise has been entirely around growing those 2 new business units that we've brought online. The creation of an individual token is probably about a $100,000 activity. Call it between $100,000 and $150,000 worth of fixed expense to create a pool of tokens in the first place. The ongoing management of the token ecosystem from a blockchain perspective is very, very cheap. It's really like a merchant fee sort of level of expense. Where the management of the system comes in is the ability to keep inventory available in the reward store, and that's managed by the token reserve mechanism that I mentioned. So as we sell more and more money is put into the token reserve. That's an asset that sits on the company's balance sheet, but we earmark that money for the operating expenses of the reward store, buying inventory into the reward store. Obviously, we're backing ourselves to be able to provide those rewards at a lower cost than the money that's been set aside. And at the end of that period of time, that may be an asset that the company can recognise. How to account for that? That's a question for the auditors at the end of the year. This is relatively new, but we're very, very confident that the way that we've set this up, that there'll be no liability for the company to contribute cash to the operation of the reward store. It will be fully funded by the margin on the products that are sold. And if we can't get those margins, we won't launch those products with the tokens. Yeah, well, that's one of the wonderful things about e-commerce is that the data is there for you. You can see the historical trends of what has been selling across which categories and what are the trending products. A lot of the way that we're going to manage the OTC piece, for example, is that we're going to look at what are the top products and where we can get those top products. We're going to have those top products available alongside, hopefully, our own branded versions of those products as well. So we're fishing with proven bait for customers with products that sell very well. We also have around about a 40 to 45 day cash to cash cycle with the inventory there. So we don't hold a lot of inventory that might suddenly go out of fashion. I think one of the good things with OTC medicine compared to some of the more trendy health and wellness stuff is that there are brands and categories that are very well established. Gastrointestinal health, cough and cold, sexual performance, skin health. These things are reasonably stable. I know what you mean by fickle. People do tend to switch from brand to brand, but we have we risk manage that with low inventory holding. And we do have transparency on market trends in the platforms. As an e-commerce player, we can see what is selling and what's not selling in all the stores. That data is available. The number and the nature of products that are able to be sold cross-border from Hong Kong to Chinese consumers legally has evolved over time. So it's not the case that it's always been available to sell OTC or even prescription medicine. So it's a relatively new regulatory move to be able to do this. So it's a relatively new market compared to the nutritional side of the market. And I think having had an established cross-border e-commerce business with big velocity in the traditional nutritional diagar space means that we've got the organisational capabilities to sell. There is a lot of logistical work that has to be done to manage the way things move in and out of the warehouses and so forth. So, you know, our capital cycle from taking a customer, from buying a product to being paid by the customer in the nutritional side of the business is about 10 days. So, you know, it's order, ship, customer receives, 7 days later the company has the cash back. So it's a very, 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 very tight cash cycle there. OTC medicine's a little bit slower, as I said, about 40 days. So the competitive advantage for us and where we have a very good skill set is being able to allocate that capital. And, you know, the company in the last financial year did $40 million worth of sales with about $2 million worth of average working capital. So that tells you how good at using the capital the company is. So I think that is a big advantage that we have, is that skill set to manage that. And then, yeah, it's a relatively new green space. So it wasn't easy to get a wholesale pharmaceutical license. That took some time. And then we quickly proceeded to acquire the actual OTC license and the Fukang company. We can buy 4 more companies like that under our wholesale approval. So we've got a little bit of a regulatory moat. Not that others could do that, but we've actually done it and we've been fast.
Excellent. Thank you very much, Anthony, for your time today. Anthony's going to be floating around after this for a few drinks and nibbles. If you want to ask Anthony any more questions or us. But thank you very much, and hopefully you enjoyed this segment, another segment of Stocks and Sips, the Sharewise office. Thank you.
Thanks, Alex.
Thank you.